This is exactly why crypto price action has been so weak recently. 10-year treasury yield breaks above 4.9% for the first time since 2007. Remember, when interest rates go up, everything crashes. So right now, we are at the level of 2007. So let's go back to the 2007-2008 financial crisis. Look at how events unfolded. Remember, it's all tied to interest rates. So we had the Bear Stearns bankruptcy filing in 2007. Then the Federal Reserve reduces the interest rate by 25 basis points. Then it reduces it again by 75 basis points after the market dips. Then there's a bull trap, right? But then all of a sudden, rates are way too high. So we start to see these financial bankruptcy, Merrill Lynch, AIG, Lehman Brothers, all start to just collapse. And then ultimately here, that's when the Federal Reserve lowers interest rates down to zero and we get a bottom. So this is where the current stock market is in white, NASDAQ versus the interest rate. So NASDAQ is defying economic gravity because it has to be correlated to interest rates in red, but it's not, right? So there's lots of more room downside, lots of more mess to get through. Exciting if you want to accumulate assets cheap, but we are starting to get talk like this from the Federal Reserve. Fed's Harker thinks Fed should extend pause on interest rate hikes. So maybe they're not going to be as aggressive. We're starting to get to the curve where things start to roll over. And so that's the reality of the situation. Kind of exciting if you know what's going on. In the meantime, Ripple may be going public. New job posting suggests so. So Ripple may be able to raise billions of dollars from public markets if it can launch a stock successfully. It's creating a role which is going to be key for coordinating with prospective investors, current shareholders, new financial analysts. And so it will be interesting as these crypto companies start to raise massive amounts of capital.